Morning, everyone. Welcome to Phillip Securities Research Morning Call for 9th of September 2024. For today, we have stock counter updates like appreciation on Shopify and update on CLI and CICT and technical analysis, and quite a few macro and sector outlook updates. And as usual, we would end the session with Singapore Weekly. So this is just a disclaimer that is for just educational purposes. And without further ado, would like to pass it.
Thank you, Ambersh. Okay, we just initiated Shopify this morning. So just a quick run through. The title is Leading E-commerce Enabler. Next slide, please. Okay, so Shopify was founded in 2006. It's a Canadian multinational e-commerce company. It functions as a software as a service platform. So basically what it does is it provides merchants with a tool to create a customizable online store. So they can also help you manage everything from product listing to payment to shipping. So up to today, they're one of the most widely used e-commerce platform globally. They serve over 1.75 million merchants across around 175 countries. Next slide, please. So we're going to be going through the investment merit. All right, so the first one is the leading e-commerce enabler. So Shopify, they offer an all-in-one platform enabling business to easily create, manage, and scale their online stores. Its comprehensive suite of services caters to business to all sizes. And we think as the e-commerce sector continues to experience a rapid growth and more consumers start shifting to online shopping, Shopify's customer-aligned revenue model definitely ensures that you will capture a growing share of the market from the traditional retail market. Shopify's GMV right now reached $235 billion in FY23, which is rising at a 5-year CAGR of around 42%, so very fast growth rate. So Shopify right now, they have two main segments. One is the merchant solution, which is basically the fee they charge you once a transaction happens. So in terms of merchant solution, the top that's driving the growth is our Shopify payment, which brings us to our second highlight. So with the ongoing boom of e-commerce, we think the demand for a streamlined, efficient payment solution is definitely rising rapidly. So Shopify payment has been the largest driver of the company's merchant solution revenue. The merchant solution revenue grew 30% year on year in FY23. Its penetration of GMV has significantly increased from 40% in FY18 to 61% now. We anticipate the rising reliance on online transaction across global markets to continue fuel Shopify's revenue growth. Shopify payment as a built-in payment gateway, they are designed to work seamlessly without requiring third-party integration, unlike their competitors like PayPal or Square. Moving on to the next slide. Okay, just now I mentioned one of the business segment is subscription solution. The other business segment is subscription solution. So basically what subscription solution do is they charge you a monthly or annual subscription fee for using their website. So which brings us to our third investment highlight, which is increased monetization in subscription solution. So for the first time in 12 years, Shopify have actually began increasing monetization by raising its price, like all price tiers, around 30% on average. And additionally, a growing number of clients are opting for the high margin Shopify Plus plan, which is the most premium plan that they have. So the Shopify plan right now charges $2.5K per month, and it accounts for around 31% of their monthly recurring revenue, up from the 22% in FY18. So we expect Shopify Plus to continue expanding, particularly as they're requiring more and more large global merchants to join the platform. So this will contribute to increased profitability in the subscription solutions. Moving on to the risks. Next slide, please. I think the slide is lagging a little bit today. Okay, anyways, so for the risk, the first is consumer spending and economic growth. So we do understand that a downturn in macroeconomic climate could definitely dampen their confidence in spending and hence impact Shopify's revenue growth. This is particularly relevant given the current trend of softening consumer spending post-COVID. However, Shopify has stated in their recent earning report that they have not yet observed this trend yet. So we'll see how it plays out in the next quarter. The second would be complexity in services. So Shopify, they expanded into a lot of different areas, such as fulfillment, financial services, and point of sale system. So all these have kind of increased their operational complexity. So it's diverting their attention from its core software business, making it a little bit hard for the company to concentrate. A recent example would be Shopify's decision to sell most of its logistic operation to its KeepMinder Flexport. They actually just acquired a company for less than a year, and they already decided to sell it because they're losing focus. So according to them, they want to sharpen their focus on the mission. So that's definitely one of the concerns that we have. The third one is platform reliability and security. Because everything is run on Shopify's platform, they must maintain constant uptime and data security. So any data breach, system outrage, or technical failure could definitely disturb millions of merchants and leading to consumer loss or potentially expose them to regulatory fine. The last one we think is the most important one is that big players are replicating what Shopify does. So Shopify do face a significant competitive risk from the big players like Amazon. So Amazon has already made strides in this direction. They've launched services like Buy with Prime, which basically allows third-party merchants to kind of integrate Amazon's logistic and payment into their own website. So this is kind of mirroring what Shopify is doing. And given they have a vast resources and they have a big consumer base, it's definitely a competition for Shopify. However, we think Shopify, their emphasis are bright autonomy and direct consumer relationship does kind of set it apart, even if Amazon is trying to move towards this direction. Okay, moving on to the next will be our basically it would be the rule of 40. So this is what we do for every single report. We try to measure the balance between growth and profitability. So we use two key metrics. One is our 3-year average revenue growth, which is 26%. And then for profitability, we use EBITDA margin, which is 16%. So add up together, it's 42%, which is above the 40% threshold. So we think it's overall pretty healthy to invest in Shopify. So we initiated coverage with a buy recommendation. Our target price is $105 with 7% WACC and 5% terminals. So that's all from me. I'll pass my time to Jonathan to talk about Semiconductors.
Thanks, Helena, and good morning. So I'll just run through our quarterly update for Semiconductors. This is the update for the second quarter. We issued a report last week titled Recovery in Full Swing, Preparing for 2025. Next slide, please. Yeah, so we'll run through the individual segments within the semiconductor industry, at least the four main ones. The first one is processor, so that incorporates Qualcomm, Intel, AMD, as well as NVIDIA. AMD and NVIDIA issued better than expected results on both top line and bottom line, while Qualcomm also reported results that were the top end of their own guidance. The only disappointment for processors were actually Intel. Earnings just disappointed overall. Demand was fairly weak, plus margins continue to be compressed. Overall, in the processor space, we're still seeing very strong demand for AI GPUs, that's mainly AMD and NVIDIA. They're seeing a broadening of their customer base, so it's not just hyperscalers buying their GPUs, but starting to see more enterprises coming on board, as well as more inflows coming from sovereign nations building out their own AI capabilities. A big reason for this is twofold. Firstly, for enterprises, they're seeing instant cost savings from buying more efficient, higher spec GPUs. Especially nowadays, there's a lot more data going around. There's more requirements for data processing as well as simulations. And so essentially, you can compute this data at a faster speed using less, being more efficient, using less energy. That's instant cost savings right there. The second one is essentially instant revenue opportunities from GPU as a service. So for hyperscalers, for example, they've got all this GPU capacity. They're able to rent out some of the capacities to smaller startups that don't have the capex to build their own, and they also don't have the time to build their own infrastructure. So they just rent from hyperscalers. And that's basically instant. The moment you get your GPU, you install it, you get it up and running, then you can start monetizing it a little bit better. So that's for the AI GPUs. On the mobile side or smartphone side, AI on device, it's actually driving a gradual upgrading cycle for smartphones, particularly premium Android phones, which are more than $400. That's how they categorize premium. You look at what Qualcomm is saying, at least in their latest results, they saw handset revenue up 12% year on year. A big driver is came from your Chinese OEMs that were up 50% year on year. So when you talk about Chinese OEMs, you've got Huawei, Xiaomi, Honor, Oppo. But a lot of them, they're coming out with new flagship models. They're selling a lot better, especially in China. China is the largest Android smartphone market in the world. In terms of memory, and this is where we're really seeing the biggest growth as of right now. We're shifting from, in terms of the leading, growth driver away from processor, now moving to memory. So pricing continues to climb due to rather tightening supply-demand environment. So all three memory companies, Micron, Samsung Electronics, as well as SK Hynix, saw acceleration in revenue growth, essentially doubling the year on year. Main reasons for this is more demand for HBM, which is high bandwidth memory, and that's the memory that's required in a lot of the AI accelerated platforms. They're also seeing a lot of better inventory levels from end customers, and so they need to stock up and buy more. At the same time, because of the supply tightening, they're able to actually raise prices, and they're benefiting quite substantially from all these three factors combined. Moving forward, these companies do expect prices to further increase, at least into next year, given consistent AI demand, plus the end of Windows 10 support, which essentially once you upgrade to Windows 11, then for your PCs or laptops, you need more processing power, more memory space, and that will drive a little bit further increase in demand for memory. The key thing is that all three companies are actually back to profitability. This is the second straight quarter of profitability. This is mainly due to higher sales. So basically for the whole of last year, they were losing money because there was kind of a down cycle for memory customers. But now as the switch is flipped a little bit, and memory demand is so strong, they're starting to benefit quite substantially, because mainly because the utilization rate continues to climb, and so they're able to basically churn out more at a higher price. So that's all for memory. I'm on to my next segment, which is equipment. So for equipment, the main companies, the main equipment manufacturer companies are ASML, Applied Materials, as well as Lam Research. So they are seeing high utilization levels for both memory and logic. All three companies also had results that were above estimates and at the high end of their guidance. Most of this was actually driven by memory strength, and high utilization rates of manufacturers of your memory chips as well as foundries. The reason for this is because a lot of most of the equipment companies actually generate a lot of service revenue from servicing and upkeeping their own equipment that they sell to customers, because the customers don't actually have the expertise or the capabilities to really do their own servicing. And so they kind of contract it back out to the equipment manufacturers. So as utilization improves, then there's a need for more servicing, because there's more products being churned out. For the equipment manufacturers, a very interesting thing is that they're actually very positive on domestic China spending. So Lam actually mentioned that they expect very strong China contribution in 2025, and strong contribution this year as well. So about 25% year-on-year growth. Yeah, a few factors are driving this. The biggest one is because China essentially has this quote unquote mandate that they want to be 75% self-sufficient in semiconductor manufacturing by 2026, I think. So they're really beefing up their production there. And this is predominantly caused by increasing trade tensions and tariffs and bans from between the US and China. So moving off to foundry, it's really only TSMC. I guess you've got global foundries as well, but TSMC is by and large the largest foundry company. The results were very strong across the board because of stronger smartphone as well as AI demand. At the same time, margins are improving because of high demand for their uh, uh, um, uh, less than 7 nanometer technology. The supply for them is also extremely tight. They also mentioned that they only expect to reach demand supply equilibrium in late 2025 or early 2026. So essentially what they're saying is that they continue to be in a very strong position. They're also going to be raising prices as they look at a lot of their customers benefiting quite substantially from the significant demand. How they're trying to monetize it a little bit better is work with these customers and raise prices a little bit to at least beef out their margins. And this essentially implies a stronger second half of 2024 and a stronger 2025 as well. And so that's essentially all for the different segments of semiconductors. Next slide. Yeah, so this is just a quick snapshot of all the different companies. You see the highlighted boxes here. Essentially, NVIDIA is still the dominant company year to date. They're up 2.5 times. They've got the TSMC that's up 65%. The market cap of NVIDIA essentially is all the other companies here combined. It's very substantial. But the key thing where we see a little bit of value actually is in the memory companies. When you look at their PE year plus 2, which essentially is 2025. You see they're currently trading at below 10 times PE, an average of 8 times PE. If you compare it to some of the other segments, as well as you factor in the growth that they expect to have, earnings growth they expect to have next year, it looks a little bit undervalued in our opinion. And so we think that even though a lot of the memory companies have run a little bit year to date, we still think that there's quite a bit of opportunity forward, at least relative to some of the other segments. So that's all for my semiconductor update. Move on to the US Power 5. Yeah, it's a quick update for the month of August. So essentially, I put this chart up. It's a little bit confusing, but what I wanted to show was earnings growth contribution from the Max 7 relative to the broader S&P 500. What you can see in the last two charts on the last two bar graphs on the right, their growth contribution is actually coming down a bit, whereas and this is in blue, whereas in orange you see a slight uptick in the overall growth for S&P 500. And this is on a trailing 12 months period. So essentially what we're trying to say is that S&P 500 is actually earnings for the S&P 500 is actually broadening outside of big tech. So they're relying less and less on big tech to drive earnings, which is healthy. It means the other 497 companies are actually improving financially and growing their margins as well. So we think that even though there's been quite a lot of volatility and a sharp sell-off, we still think that fundamentally the S&P 500 is still fairly healthy and should be poised for more growth moving into next year. Next slide, please. Yeah, so just to run through the different sectors, the S&P was up 2.3% in August. Most of this was coming actually from defensive as well as interest rate sensitive sectors. So you see here staples, real estate, utilities, and healthcare. There's quite a bit of worry about a slowing economy, recession coming, as well as rate cuts. And so that's kind of priced in, and that's what the main drivers for these segments. If you look at the faster growing and the more cyclical names, technology, discretionary, communications, they're actually underperforming the overall market. In terms of the top gainers, the biggest name you probably below here will be Starbucks. They're up almost 21, 22%, just because they fired their CEO and they replaced it. And they replaced him, and the markets were very positive on this. The other names, I mean, the top gainers would be CrowdStrike as well as Eli Lilly. In terms of the top losers, you got a couple of your, I guess, larger semiconductor names over here, Supermicro, Intel, just continue to sell off on a little bit of controversy for Supermicro, and just really poor earnings for Intel. Next slide, please. Yeah, so in terms of our model portfolio, we've only got 5 names here: Nvidia, Amazon, Alphabet, Microsoft, and JP Morgan. This remains unchanged. The portfolio is down about 1% for the month of August. Compared to the S&P 500, we've essentially been lagging quite significantly the last couple of months already. This is because there's a big rotation out of your growth story and out of financials into more defensives, like I mentioned earlier. But year to date, the portfolio is up almost 40%, more than double the S&P 500. And this is as of 31st August 2024. So model portfolio is still doing fairly healthy. The only real underperformer, I think, in this portfolio year to date, it would be Microsoft. The rest of the companies are actually either in line with S&P 500 or outperforming slightly. Yeah, so that's all for the year's Power 5. I'll hand it over to Darren for some of the properties.
Yeah, thanks, John. Yeah, so for me, I'll give an update on what happened last week. The fact that CLI, CapitaLand Investments, will be divesting Ion Orchard, its 50% stake to its listed platform, CICT. Yeah, next slide, please. Yeah, so I'll first talk about CapitaLand's perspective, the parent. So they'll be divesting 50% stake. The other 50% is held by SHKP, so it's held in a joint venture. The sales consideration will be about 1 billion in Sing dollars, and CICT plans to pay this fully in cash. Yeah, so as a result of this transaction, FUM of CapitaLand Investments will increase by 1.85 billion Singapore dollars, and they will have surpassed its annual divestment target of 3 billion. So year to date, after including this Ion Orchard, because it's a huge divestment, its divestment year to date will be 3.6 billion. So CLI will use these proceeds to diversify the portfolio across different geographies and invest more into different asset classes as well, while establishing new fund products to enhance its FRB and increase its FUM basically. So the parent CapitaLand has also fully committed to subscribe to its preferential offering entitlement. So the preferential offering is 57 to 1,000. So CLI has fully committed to subscribing to that. And right now, CLI's stake in CICT is about 24% as of 30th June 2024. So this transaction, we see it as positive for both sides. So from the sponsor's perspective, basically CLI will be advancing its asset-light strategy. So it will be reducing its quality assets from the balance sheet and basically increasing its FUM. So that's our goal, like to be asset-light. And no change in our target price and our call. So still a buy call, target price $3.38. CLI is paying a good yield of 4.3%. And the absence of Ion Orchard's contribution will decrease pro forma EBITDA by about 5% or 106 million. So this is assuming that the transaction of the divestment happened at the start of the year. Yep. This 5% is a full year 5% EBITDA, 106 million. Yep. And yeah, like I mentioned, basically this sales consideration will be fully paid in cash by CICT. Yeah, next slide, please. So just some highlights on the CICT's perspective. Yeah. So they'll be acquiring from the parent 50% stake. So they'll be acquiring at a gross yield of about 7.1%. The NPI yield wasn't disclosed, but we estimate it to be about 4.9%. And this acquisition is DPU accretive for them. So it's 0.9% DPU accretive for first half 2024, and it's about 1.2% DPU accretive if we take it like pro forma DPU accretive for FY23 financial results, assuming that this transaction or this acquisition happened at the start of 2023. So the purchase consideration is about 1.07 billion. the valuation was in between the two independent valuations done. So it's about 3.7 million. There's some property stats at the right side. I put a snapshot of it there. Yeah, and the total acquisition cost will be 1.1 billion, including acquisition fee that's paid in units and some other expenses. Yeah, because it's a related party, that's why the acquisition fees have to be paid in units. Yeah, that's part of the so-called the rules. Yeah, and as a result of this acquisition, the aggregate leverage will remain stable. It will increase just slightly from 39.8% to 39.9% because they'll be doing an EFR or an equity fundraising. So the funding will be 350 million private placement at $2.04. So this has really, the results are out already and it's been 3.7 times oversubscribed. So the demand is huge. And basically, if you look at the share price, after the announcement of this equity fundraising, the share price fell by about 2 to 3%, but it's since recovered and is way more than even before the announcement now, the share price. Yeah, and coupled with the private placement, they'll be doing a preferential offering. So it's about $2.07. Yep, and the rate that it's at is at 56 units for every 1,000 units. So this is to raise 757 million. And like I mentioned, the CapitaLand, the sponsor, will be fully subscribing to its portion of this preferential offering. The only thing that's stopping this transaction from going on now is basically the EGM. So they need ordinary resolution of more than 50% of the total votes cast. The estimated completion is around fourth quarter this year. And basically, CICT will benefit from this acquisition because Ion Orchard is a very iconic mall, a downtown mall, and will continue to benefit from tourism recovery and a healthy economy. So Ion Orchard is also basically fits very well into its portfolio, CICT's current portfolio of very strong Singapore retail assets. Yeah, and CICT is now, after the share price run, is now paying a dividend yield of about 5%. Yeah, so that's all from me. I'll hand over time to Zain now. Thanks.
Thanks, Darren. Good morning, everyone. I'll move on to the technicals. Next slide, please. Yeah, so for S&P 500 chart, we saw a breakdown of a range consolidation between 5,560 to 5,645 last week. And then with that, we're likely to see some further downside with current resistance at 5,450 to 5,500 area, while the next support area could be at 5,300 to 5,370 area. Yeah, so that's all from me. I'll hand over time to Paul to talk about the Singapore Weekly Index.
Yeah, thanks. Thanks, Jin. Sorry, the audio is a bit poor on our side. So I'll just run through the key highlights for the macro. There's a lot of macro news that were out in Singapore. The news was largely positive. So if you look at the first one is arrivals. So basically the tourist arrivals into Singapore, it is still growing about 17%. If you compare the pre-pandemic, the growth rate is probably like 4 or 5%. Most of the growth actually came from China arrivals, which almost doubled. I mean, it's almost 90%. The other news we had was retail sales. Retail sales was surprisingly weak, but for supermarket, or I guess if you're monitoring Sheng Siong, the supermarket sales is still pretty resilient, about 2% growth. But the hot sector in Singapore is really construction. So if you look at construction awarded, it almost tripled in July. Construction awards can be from the public sector, private sector, but it's very volatile. So every month the numbers will change. But even then, year to date, it is up 30%. And on the 12-month basis, that means you take a rolling annual number, it's almost 40 billion. So this is like a 10-year high in terms of construction contracts awarded. The other news we had was PMI, just a gauge of manufacturing, and that is also the highest in 3 years, and also compared to a year ago, it's actually much better than a year ago. So manufacturing is also improving in Singapore. If we move down to the US, I won't go too much because all over the headlines anyway. But if you look at payrolls, it was actually slightly below the expectations, but it is actually higher than last 2 months. The unemployment rate also actually improved, and also, but the bad news in US is actually the PMI, the new orders actually dropping quite sharply, which is strange, which I think many Asian is doing well because many export sector is doing well. Probably a lot of inventory loading, I guess, like before the elections. Next slide. If you move on to our tactical views, so why the payroll numbers or the job numbers was important, because this is before the September 18 meeting. So for us, how we see the numbers is that it was within expectations in a way, and again, still better than the last 2 months. So generally positive, especially unemployment down. But for us, we still think in the US, the job numbers are actually pretty weak, because most of the jobs right now comes from the government sector. So you're talking about government, healthcare, social workers, and so forth. You take that out and you focus on economic sensitive jobs. That means your private sector jobs, I mean, talking about banking, IT, and that is actually down 40%. It's also the weakest in almost since 2010, more than 14 years kind of lows. And the other thing to worry about is that the last 2 months, they actually revised down the numbers. So even though you get this 142,000, you should expect this number to be revised down. So the last 2 months, the numbers, the payrolls that we're talking about, they actually brought it down by almost 80,000 or 30% down. And before that, last month, they announced that the last previous 12 months up to March, the US actually brought down their numbers by 800,000. So I guess whatever payroll number you have here is probably overstated. There are technical reasons, I mean, if you want to explain. But so for us, the big worry now is that, so what happens is that if the labor market is weak, and the households worry about their jobs, then they will probably start to cut spending. And then this will, of course, affect other sectors. And then you get this negative spiral of weak labor, then weak demand. Then again, because of weak demand, employers going to cut jobs. Then after you get again weak demand. So that is the worry, I guess, the Fed will also have. And that's the negative spiral that investors have, that could trigger a recession. But I think the one that's holding jobs right now is all the government jobs. So that spiral isn't going to happen. Or even if it does, it's very mild. So the second point here is that we think there'll be 25 basis point cut by the Fed on 18 September. It's not only the Fed that's cutting, the ECB is going to meet on Thursday, and they are also going to cut another 25 basis point. It's almost confirmed they're going to cut. So what all this means is that it's a very favorable backdrop for REITs continue to be, because we are only the early stage of a rate cutting cycle. So we think maybe 3 rate cuts this year, then another 4 rate cuts next year. So that could still help the REIT sector. And if you think growth is slowing down, so this will also be beneficial for a defensive sector like REITs. If we move on to one last point, will be construction. So we think construction is still going to be another 2 years of very buoyant orders. I think we saw the newspaper that the authority is going to start T5 construction in the first half of next year. And these are multiple year. And then next year, you're going to have the 2 integrated resorts starting, each one about 7-8 billion, so another 16 billion. So you're going to have like a fantastic runway for the next 2 years in terms of construction orders. So for us, of course, it's virtually the whole construction sector is a buy. But for us, we prefer the picks and shovels, the building material suppliers, and both of these have actually huge market share. So like Penn United, they got 40% market share. Then BRC Asia, they got 70% market share. So no, you really don't have to worry who actually wins the job, because they just supply to whoever is the winner. In terms of the events, so on Monday we're going to have iPhone 16 launch. The stock that will be most impacted will be NanoFilm, of course, because they're the largest exposure for Singapore context. For us, I don't think we're expecting anything exciting. They're going to announce some AI features in the phone, but I think the Samsung, even the Chinese manufacturers already have AI feature in the phone. So, but again, there'll be a lot of hype, so maybe they could carry the Apple stock. I'm not sure, we can ask Helena later. Then after that, you have a US presidential debate. The race is now almost tight. I think the betting odds is Trump has 50%, and then Kamala has probably at 49%. So it's a very close race. And then on 11 September, you have the CPI number, and then you have the ECB rate cuts. This week we have this Australian mining company doing a presentation. Then the following week we have Hyphens, CICT, but that's only for our trading and sales people. And then we have 717 Live and Comfort and so forth. So feel free to dial in, is open to everyone. Next slide. Okay, I'll move on to this. Okay, this is a very noisy, complicated chart, but we just want to just to frame with interest rate cuts, how does the market perform? So for us, if you look at the rate line, so that's basically when that is the Fed funds rate. So when it comes down, means the rate line come down, means that's when the Federal Reserve start cutting rates. So of course, the market worry that whenever the Fed cut rates, we somehow enter into recession. If you look at the beige trend, so of course, it's not all the time we will run through, but there's been some coincidence. There's been several times. So that is the worry the market has, that the Fed is too slow. When the time they cut, it's really too late. The economy is going to go into recession in the next few months. But then the highlighted beige one bar, you see, that's when the recession happens. So whenever the rate line goes down, then of course it's not all the time. If you move on to the next chart. So if you do a table, again very complicated, but you just focus on the red bar here. So what it means, zero. So when the Fed actually cut rate in July 1990, they were already in a recession, and then the market started to collapse. I mean, down 15, 25. But if you look at the other periods, 95, 98, when they actually cut rate, they weren't in a recession. So this was like a soft landing scenario. So even though they cut rates, they weren't late, and the recession happened like many, many years later. So what we're just trying to say is that it doesn't always mean that when the Fed start to cut rates, that's when the market might go into recession. So if you look at the last bar here, when the Fed cut very aggressively because of the pandemic in March 20, the market actually although they were already in recession, but of course that was the pandemic, is a bit more unique because the government did some aggressive stimulus. But again, just to give you a reference, the blue shaded bar means the Fed actually cut and the market didn't go into recession. So you're talking like 68 months, 29 months. Again, just to give everyone some perspective of the rate cut, should we worry or not that the Fed is behind the curve? Next slide. So the next few charts is just to show the illustration. So on the left is just the retail sales. No, it's quite sluggish. Then on the right is just to show the tourist arrivals. So China arrivals is the ones supporting all the arrivals into Singapore. And we still got some way to go before we hit the blue line here, which is about 15 million plus, I think. That's when the pre-pandemic. So you should expect tourist arrivals to still remain strong, and even if they cross pre-pandemic, you should expect it to still grow at least under 4 to 5%, because the last few years, if you do a cumulative, it should be growing on a certain trajectory. So it should continue with the trajectory. So we should still have another 1 or 2 more years of strong arrivals. And of course, this is important because you're talking about hospitality industry, you're talking about the gaming industry in Singapore. So that's why we monitor the tourist arrivals. Next slide. Okay, so this one is on the left is the construction industry. So if you look at the blue line, is the construction award. So this means this is the actual things that's awarded awarded for investors. I mean, awarded that means they actually award the contracts. So you can see there's a vertical lift off. So and it hit 40 billion. So we think the next 2 years this line will continue to grow because there's T5, the IRs, and many more projects. So this is probably the strongest sector we have in domestic Singapore. On the right is just to show you in manufacturing is at least still climbing up, at least for Singapore. Next slide. Okay, this is my last slide. This is the employment number in the US. So the problem is the red line on the left. So this is the economic sensitive jobs, like private sector jobs. So that continues to slide down. But in terms of the government jobs, so that's the one supporting. So that's why there's a question of whether there's a recession. We don't think so because it is the government that's supporting. I mean, like, used to be government jobs was only 30% but now it's 60%. So the government is really supporting the economy. So that's why we think it's going to be hard to get a recession. Even if it is, it will be very mild. But the key thing is that the growth is slowing down. The one on the right is just vacancy, because the media always like to talk about a lot of vacancy. But if you look at the vacancy to unemployed, means like how many jobs out there for every person that's unemployed. So it's actually 1.07, which is actually worse than pre-pandemic. So actually the job market now on paper is actually worse than the pre-pandemic levels. So, but again, government is the one that's supporting. And it is just some illustration just to give everyone a sense of what's happening. Okay, I think we are done. I think can move on to Q&A. Thank you.
Yeah, thanks, Paul. Maybe I'll take some questions first. Mostly semicons. The first question here is, any idea why Micron share price underperformed versus other semicons recently? Can't seem to find any news. Yeah, so actually, I'm also a bit puzzled because their fundamentals are actually improving quite significantly. You just listen to their earnings call as well. The only thing that I can think of is that they're probably, because most of their customers are either your smartphone guys or your PC guys, and the volume on those isn't expected to really explode exponentially compared to, let's say, your data center, your AI data centers. So in terms of the AI data centers and the high HBM3E, the winner here is actually SK Hynix. So likely just some positive news from SK Hynix causing a little bit of a sell-off for Micron. But other than that, fundamentally, they're actually improving. Valuations right now are quite attractive, I think. Yeah, so hope that helps. The next question here, hi Jonathan, what is the role for Broadcom and Marvell Semiconductors? Yeah, so Broadcom essentially, their main business is, up until recently, their main business is selling semiconductor chips for Wi-Fi connectivity, whether it's in your phone or in the data center. But recently, they also have VMware, which I believe they acquired. VMware essentially is a visualization and cloud computing platform. So when you look at their latest earnings, latest results, right, they had, I think, almost 50% year-on-year growth, but almost all of this came from their VMware software. When you look at their actual semiconductor sales, I think it grew maybe like 2 or 3%. So I want to say, Broadcom is mainly known for their Wi-Fi connectivity, 3G, 5G, Wi-Fi chips in your handsets as well as your laptops. But I guess right now more and more it's becoming known also for their software stack. For Marvell, they mainly manufacture the infrastructure, so I think it's like the server racks and all that. And they customers are essentially all your other large semiconductor companies. Yeah, so in a nutshell, that is what they do. Or rather, that's what these two companies do and where they are in the ecosystem. Yeah. Now question here. Hi, John. Did the Wall Street Journal falsely state NVIDIA got subpoenaed? I think so. I think if you the following day after they announced this, NVIDIA actually came out to say that no, they didn't get subpoenaed. So who knows who is right? But obviously, I guess if NVIDIA comes out and says no, I would probably trust them more than I would trust the Wall Street Journal. Yeah, but unfortunately, I don't really have much more color on that. So hopefully we'll get some clarity this week. Probably have to probably be talked about quite heavily this week. Here's one more question. Yeah. Your comments on ARM and Marvell, do you think there are growth drivers for better price in stock? So we don't cover either of these stuff, but I think for ARM, they have their own ARM architecture. And that's actually picking up quite a lot in terms of handphones or smartphones. In terms of the CPU architecture, Qualcomm's using all ARM architecture instead of x86 by Intel, I believe. The reason for this is because it's more efficient and more flexible. So I think with respect to ARM, there's a little bit more runway in terms of growth, especially if the smartphone market starts to pick up. And then they do operate as they are essentially a designer, right? So they are a fabulous business model, so very asset-light. So margins are quite high for ARM, so there's a little bit more, I think maybe a mixed growth opportunity compared to Marvell, because they manufacture your essentially your hardware. Yeah, so hope that helps. Unfortunately, I don't really cover either of them in depth, but a bit more familiar with ARM. So hope that helps, at least provides a little bit more clarity when it comes to the stock price. And when it comes to what how they're trading right now, I mean, obviously ARM has seen some massive swings. They're still trading quite a lot above their PE. But the potential for ARM growth is very significant, and a lot of the revenue translates into earnings. So probably if you had to pick either one, probably pick ARM over Marvel. Yeah, I hope that helps. I think that's all the questions for me. Maybe I'll hand it over to Helena or the rest of my colleagues. Thank
I guess I'll start taking some Shopify questions. So one question was asking, who are the competitors of Shopify? So what Shopify does, actually, they venture into so many different segments. So of course, for every single segment, they will have different competitors. For their e-commerce website building, they compete against WooCommerce, Wix, and Squarespace. So for WooCommerce, they're open source. So a lot of the WordPress users, they will actually prefer them. While for Wix and Squarespace, they usually cater to only small business and personal website. Unlike Shopify, so Shopify, they're able to cater to either you're a startup or you're like big enterprise. They're going to be able to cater for both. So I guess that's where they get a strength. So right now, in terms of this market sector, they hold the largest market share at 33%. They're still considered the dominant player in this space. And another one is the market space. I think another question also asked, is an e-commerce very competitive? Like what differentiates them? So in terms of marketplace, their competitor include major players like Amazon, eBay, Etsy. So unlike these marketplaces is usually where the sellers you complete directly on the same platform. So what Shopify does is they allow the business to kind of build and control their own online stores and give merchant their complete ownership of the brand and the consumer data and the pricing strategy. So if you go take a look at all the Shopify website that different merchant have, it look completely different. You cannot really find the Shopify signature there. So each website is very, very unique. So it kind of attract businesses that kind of value their brand identity and direct relationship with their customers. Then in terms of payment solution, they're recently pushing their Shopify payment quite a bit. So that definitely directly compete with payment giants like PayPal, Stripe, and Square. But for Shopify payments, a little bit different. They tend to offer a more seamless experience for users. For example, their Shop Pay, what they're able to do is they're going to be able to remember your card information, your email, your address. So the next time when you check out, you don't need to fill up any of the information. You just need to click and it goes right away. Actually, if you do a lot of online shopping in Singapore now, even now, you always see the word Shop Pay pop up. So that's actually under Shopify. So it's a full integration into their platform. So it allows merchants to kind of manage all aspects of their business, from inventory to transaction. Everything is going to be in one place. So it's a little bit different from what PayPal and Stripe does. In terms of their point of sale system, so point of sale system basically is if you want to manage an online store, if you also have a physical store and you want to manage both at the same time using an omni-channel solution to seamlessly track your sales, your inventory, you can do it all together. So that's the POS system. So right now they do have other competitors like Square. They will also do the same thing. So I guess they don't really have a competitive advantage in that. But all in all, I would say because they venture into so many places and each one you have different competitors, but they're actually the only company who offers services across all these various segments. So I guess that kind of distinguishes them from other competitors. Okay, I hope that answers your question. There was another question on what to expect for the Apple event tonight. So apart from all the features that are already disclosed, the recently the leak out information was there's going to be a new brown color for the iPhone 16. It's going to be more like a sand dune-ish color with a titanium finish. So that is one of the key factors they're going to release tonight. They're also going to introduce a new button called the capture button. So it's going to be the same way as you use a camera. You know, when you press the button halfway, the camera is allowed to autofocus before they take the picture. Then you can also press and hold the camera, then you can start taking video. They're also going to open the button to third party, which means third party apps, you're going to be able to customize it to use the capture button for something else. Then for their iPhone 16 Pro, they introduced a tetra prism lens. So basically what it does is it will have a folded glass structure under the lens. So whatever light that goes into the camera, it will reflect 4 times before you actually focus. So it allows for longer focal length. So what it does is you're going to be able to take better picture of subjects that's very far. But to be honest, that's not really something exciting because Huawei has been having this for a really long time. And so they're basically just playing catch up in terms of that. There are going to be other camera features like 48 megapixel ultra wide. So there's going to be some improvement in the camera overall and also better slow motion. They're also improving their display. So under the sun, you're going to be able to see it better. And for the Pro model, there's going to be a slight increase in size from 6.1 inch to 6.3 inch. They're also following the iPad where they're making it thinner so you can pack and they're having a more powerful battery so they can pack more juices in a smaller space. So all these other features, but the exciting Apple Intelligence, they're not going to be rolling out this year. They're going to start rolling out feature by feature in US at the end of the year, but it's unlikely to be a common trend in a short time. So Apple reportedly, they never give this as a guidance number, but judging from the number of chip they actually order from TSMC, they're targeting around 90 million iPhone 16. Which compared to last year's iPhone 15 launch, it was a 10% increase. So I hope that answers your question. I think I just saw another question on C. Yeah, let me find it. Oh yeah, any hiccup of C in the light of Pinduoduo troubles and weakening sales and related customer issues. I would say weakening consumer spending is definitely a trend that we see. It's a worldwide trend. But I wouldn't say they're too worried about Pinduoduo. So Pinduoduo, they're trying to expand overseas under the name of Temu. So Temu is actually really unstoppable in Europe. You see, like once they set up a point in Germany, then the next day it's going to be France, Italy. They pretty much scatter everywhere. Even countries like Iceland, they also have spot. But if you look at their expansion in Southeast Asia, they start expanding. Their first stop is in August last year in Philippines, then in September in Malaysia. Pretty much there's no splash. And this year, in the beginning, they wanted to expand in Thailand. So all these we haven't really heard much. And Philippines is actually a very big potential market because they have a very young population. Over 60% is young people, and they have like increased internet and phone penetration. So it's kind of surprised that there's no splash there. Right now, the Philippines overall GMV that they contribute is only 0.3% of the entire GMV. So I would say the reason is Southeast Asia, there are more Chinese people, so people are more aware of the cheaper price in the China market. So over the years, I mean, I'm from China myself, so a lot of time I try to find something on Shopee, So I do have a tendency of checking the price in China market and calculating how much does it take for the delivery to come over. And I realized actually it's already really competitive. So like the price difference is really not that much. So if you need it urgently, I'll probably just buy it on Shopee. So I guess over the years, there's too much penetration. The price is already very competitive. And Shopee itself, they're investing heavily in logistics. They're trying to decrease their delivery speed. So 70% of all the Shopee Express in Asia, the order they're going to be able to deliver within 3 days. And they're going to be able to decrease the cost per order by 8%. They're also aggressively pushing for growth. They're spending a lot on their sales and marketing. Their gross order GMV both accelerating quite a bit. And now they're actually in a pretty comfortable stage where they're talking about boosting their take rate, both for advertisement and for commission. So they kind of feel like they've actually built enough a mature base for them to actually start profiting. So I would say in the short run, Temu is not going to be something because they just started out. They don't have any base in Southeast Asia. They're not going to be able to compete with the local logistics. And with the price of Shopee already pushed down quite a bit, it's unlikely to be a big problem for C. So I hope that answers your question. I'll pass my time to my colleagues.
Yeah, sorry, Ambrish. Yeah, I'll just go first. Can you share what's the benefit of a company to be asset light? for example, CLI to own ION via CICT instead of owning directly. Yeah, so for company to be asset light, basically you'll benefit because they'll have lower capital requirements and they also do not take the risk of the asset itself. Yeah, like they reduce the asset exposure on the balance sheet, and they do not basically they do not need they need less funding as they do not need to have the upfront funding for the investment in these properties. Yeah, so that is some of the benefits for company to be asset light, and does increasing the FVM affect the price to book? It's more of off balance sheet, so the divestment it won't really affect the price to book. Because basically they will still receive the cash. So no change in the price to book. Um, eligible eligible to buy CICT rights if situated overseas. Yeah, you can. How do you do so? Yeah, you can do so through your brokerage, and the deadline is wait, let me see. The deadline, so the date for the preferential offering is 16 September is the opening date at 9 a.m. and the last date for you to subscribe or accept the preferential offering is 24th September before the market close. So it's at before 5:30. So 16 September 9 a.m. to 24th September 5:30 p.m. So that's the time you can subscribe. The US 10-year yield had moved down significantly over the past month, yet SU prices have not moved up in the same degree. What's the possible reason? Yeah, usually there will be a delay. It won't be like for like when the US 10-year and the Singapore 10-year bond yield move down significantly. Yeah, most of the time there'll be a lagged effect before the SG rates really start to recover. Yeah, so it's also it's definitely not like for like, so it's very unlikely that when the SG 10-year you come down significantly, then the SG price will go up by the same percentage. Yeah, it's definitely not 100% correlated, but it's still negatively related. Like when the 10-year you come down, the SG price will improve. It's definitely negatively correlated, but it's not perfectly negatively correlated. Like it's not one for one. Yeah, it's the negative correlation is not minus one. Yeah. Yeah, what's the impact of the CICT with recent acquisition? Yeah, I mentioned it in presentation just now. And yeah, so any advice on whether to participate in the CICT rights with the recent acquisition? Will this lead to further share price dilution? Yeah, so I did some quick calculations. The theoretical X rights price for this CICT acquisition is $2.12. So 2.125 actually. So um based on the rights issue of $2, so if you don't subscribe for the rights, basically you will be diluted. Yeah, so we definitely think that yeah, you should subscribe for the rights. That's our house view. And if you don't, you'll be diluted. Yeah. Yeah, Ambrish, I'll hand over to you. Thanks.
Thank you, Darren. So there's one question for me. Hi, what's the expectations for Adobe results this week? So Adobe, it's expected to report its third quarter results later this week on Thursday after hours. So in terms of expectations, total revenue, it's the consensus expectation is of revenue growth of about 10% on a year-over-year basis to about 5.4 billion US dollars, and this growth rate is more or less stable as compared to the previous quarters. And in terms of profits, the earnings are expected to grow by about 11% on a year-over-year basis. This is also in line or stable as compared to the previous quarters, previous 3 or 4 quarters. So this basically suggests that there is no significant contribution from its generative AI tool, Firefly, which basically allows users to generate text-based images by text-based prompts. So there is no significant contribution, at least we don't expect any significant contribution this quarter. And in terms of our recommendation, we have a reduced recommendation with a target price of $480. And this is mainly because we are yet to see any visible or significant contribution from its Fearfly tool. And also, like it's facing increasing contribution from startups like Mid2 Journey, which and OpenAI, which are also which are also providing the similar features, wherein the users, they can generate images from text-based prompts. And also in terms of valuations, we believe that they are a bit overstretched, stretched, mainly because it's currently trading at a forward PE multiple of 28 times, as compared to the S&P is 22 times right now. So overall, we have a reduced recommendation with a target price of $480 on Adobe. Hope that helps. Would pass it on to the rest of my colleagues.
Yeah, okay. Yeah, thanks. Let me just answer some. Paul, is your base case a soft or hard landing? So for us, we still think it's a soft landing. Of course, you have to also look at what's the definition. So probably soft landing for us is maybe 0.5, 1% kind of GDP growth for the US. And the reason why we say so is that firstly, like we mentioned, government spending is still strong if you just look at the jobs number. And secondly, the Fed has room to cut. So right now it's only 5.25. I think the Fed to cut, 200 basis points, 300 to interest rate to 1 point something. Definitely the market's going to rally, and then this kind of placate some of the weakness in the economy. And my final point is, even if you go to soft landing, I think the damage could be done on the market. I think because the market rallied so much. I'm talking US market. So it may be soft, but will it be a soft landing for the equity market? So that I'm not too sure. So for that, I think the market could also maybe correct a little bit, even if it's a soft landing. Okay, so sorry, I'm using my phone instead. It seems that the US yield curve is uninverted. That means 10-year is higher than the 2-year now. Likewise for the Singapore 10 2-year. What is the implication? Actually, upward sloping curve, firstly, for it's positive for actually the banks in a way, because they can do this carry where they borrow normally most of the deposits are normally short term, and then they can actually push it up longer term and get some incremental yield. I've forgotten what's the term they use. So actually, upward sloping yield can be positive for bonds. I'm talking about the equity market. The other worry is that there is always some worry that once the bond yields from inverted to uninverted, I'm sorry for this weird jargon, but once it goes back to the normal positive sloping, it actually tends to mean that the recession is nearer. So that's another interpretation. But for us, I think if I was a bond player, our view is that the sweet spot, if you're going to play this inversion, is probably going to be the nearer 2 to 5 year bond, the curved part of the market. Because we think whoever gets elected, we just worry that the US is going to issue a lot. The deficit is going to blow up, and then that will push the yields even higher at the long end. That means the 10-year might go up even higher. So that's going to be bad for the bond prices then. But that's the general view. But I don't think there's any real direct connection if it's upward sloping to the equity or bond market. Just our general thoughts. Hi, for construction, you mentioned Pan United, BRC Asia. Is it limited mainly to Asia aside or US as well? Please share more about buying picks and shovels for context of US. Actually, these are Singapore stocks we're referring. So when we talk about Singapore strategy, we are referring mainly to the Singapore market, not so much to the US. So BRC Asia and Pan United is mainly in Singapore, because we are playing the next 2 to 3 year upcycle in the construction sector for Singapore. So buying picks and shovel means you are buying the raw materials. Basically, they will supply the materials because every project will need cement and every project will need steel. So they will provide the basic building materials for a building, I guess. So, and you don't have to bet like which construction company will get a contract, because they got 40%, the other one got 70%. Virtually every contract they have a share in it, and they will have a stake in it. So to play to buy the whole sector, you just buy these two companies. I mean, just generally our view for upstream in construction. What's your view on Yang Zhejiang? Okay, so we may not have the right view, obviously, because we didn't get into the rally, so the rally in Yang Zhejiang in part, or a large part, was due to the bounce in the container vessels. You know, container vessels, right? Those that carry those big containers. So for us, we are just a bit worried because the container market jump, I don't know, bounce a bit, double or triple the freight rates. So to take a view on Yang Zhejiang, you're almost taking a geopolitical view. You have to take a view what you think is happening in the Red Sea, what you think the Houthis are doing, which we actually have no clue what's going on. So that's why we are a bit hesitant to have a very positive view on Yang Zhejiang, because container rates can drop off anytime. So what happened is, when the Red Sea happened, the calculation or the estimate is that it soaked up at least additional 10% of container ship demand. So in just that few months, the container demand for ships jumped about 10%. Even though on orders is another, I think, 30%. So that soaked up a lot of demand in the near term, but the supply is still coming. And again, it's very speculative because, like I said, I'm not sure what the Houthis going to do next. So that's why we're a bit more cautious on our view on Yang Zhejiang. Again, that's our own view, and of course the disclaimer is that we never covered it when it rallied, so that's take that into context too. Paul, can you give your update on Propnex? Still have a buy rating. Will be good to have Mr. Ismail to give an update. Yeah. So just a side note, we actually, all the requests that we got, like the brand banks, even Bousted, we actually do try to reach out to them. Sometimes the email just bounce, even though they put the email there. The email bounce, or their external IR don't want to answer, don't even want to reply. So we will try. For Propnex, it's easier because we have coverage and we know them. So we will definitely ask for one. So for our view, we have a buy because we think there will be a recovery in the second half because of the new launches. And 2025 will be interesting. So 2025 is interesting because it's their 25th anniversary, and we think and we guess that they're probably going to announce a special dividend. So right now, I think the dividend yield is probably 6-7%, and there could be a special next year. So that's why we still have a buy. We were surprised because first half the earnings was weak because the new launches were so terrible, one down 50%. But in general, we still have a buy because this company has like a 50 to 60% market share of all the transactions in Singapore. Yeah, but we'll try. We take that into consideration. We'll send them an email and try and ask if they can do a corporate insight webinar with us. But thanks for the request. With the interest rate cut expected announced on 18, not 17, I think it's 18 September. That's when they were actually announced. Why is our 3 local banks up? Okay, so there are a few reasons why. So the banks have guided that even though you have, if I'm not mistaken, like 3 or 4 rate cuts, they said that they can still maintain the margins, or the impact on the margins will still be limited. So I think that gives the market comfort that even the rate hike, the 3 rate hikes this year won't impact them. The second thing is that we think that fee income, like I highlighted last week, we think fee income will be strong because there was a big spike in volatility. I think all of us experienced it in August, and that usually is good for the trading arm. Trading business really do well because not only because they take positions, but because customer flows will increase because everybody didn't want. Then of course the need to hedge everyone's position, especially in FX, will also benefit the banks. So that's why we think the upcoming quarter results should be strong. But again, longer term, the bank earnings will be under pressure. I mean, there is no doubt. You're talking of another 7 rate cuts. There's no way the banks. So one way to think of banks now is that, do you want to own a floating rate bond in a way? Because banks earn money on the floating rate. So when interest rates rise, they can charge their customers like us higher. But when interest rates are down, they will have to charge lower. So the question is, it's almost like asking, do you want to own a floating rate bond now because interest rates are coming down? So of course, in the medium term, is a negative for the banks, but I think near term, there is still some tailwind to their earnings. I mean, just our view. This Glenn couldn't be here because he's on leave, so I'll just answering on his behalf. But again, this is just my view. SGX price keeps going up. Why? The dividends seem to be big at the price. Should we expect it to come down shortly? Okay, operation. We can only say operationally. Glenn is not in. Other catalysts, I'm not sure. Of course, there's this major shareholder buying. But for us, the earnings could be strong in the near term because of the jump in volatility. But apart from that, we're not particularly sure because the interest rates coming down also it impacts them because they actually earn a lot of interest income from all the collateral balance. Because whoever wants to trade through the SGX, especially futures, they actually have to put collateral balance with them and they earn a spread on them. So operationally, I don't see it exciting. Any other catalysts are not. Yeah. But the data has been strong. I mean, the transaction volumes has been strong, but I'm not sure whether that's the reason why the share price go up. Yeah. People keep saying we should buy bonds now, but if interest rates are declining, what's the advantage of buying bonds? The US bonds ETFs have a tax imposed on dividends. Okay, the benefit of bonds is that when interest rates go down, you get the capital gain too. I think that's why everyone is advocating bonds because you get the capital gain, even though you get lower interest rates. Yeah, it's like FD. If your FD was 5%, then but of course FD you don't get the capital gain because it's not transacted. But just to give you an understanding, if you log into a FD for 5%. Right, but right now the market is 4%. Of course, this shows that your 5% has value, and you can sell that value. I mean, like a bond. But of course, FD rates we can't. Just to give a better understanding. So that's the advantage of buying bonds. Do US bonds ETF have a tax imposed on dividends? I think this one. I think we'll ask Helena to go and check. I'm not too sure about the tax implication on that, but we will try and ask our ETF desk if they have an answer to that. Sorry, that one I don't have an answer for you. Sorry for that. Is it worth holding on to Wilmar for dividends? Has there been a dividend growth? There has been, but I think it's very muted. I don't think people buy Wilmar for the dividends. People, I think they buy Wilmar for exposure to plantation stocks. So if plantation prices rise, palm oil, so Wilmar will benefit. If the Chinese consumer demand rise, then Wilmar will also benefit because consumer demand improve means there will be better. They can sell more of their branded oil in China, and also it means the Chinese consumer consume more meat, and then they can sell more of their feed to feed all these hogs. Oh yeah. So I think they buy that for that, not so much for dividends. I'm not sure. I think the dividend yield is about 4%. Yeah, I need to double check again, sorry, on the dividend growth on the track record. But I doubt people buy because if you're buying commodities, it's an extremely volatile industry. So nobody buys, or hardly, of course, maybe the oil sector, the US oil, usually people buy for the trade rather than the dividends because, you're ultimately buying into the volatility of the commodity prices like palm oil. Okay. There's a few more. Sorry, there's quite a lot. Huawei. Yeah, you're right. Huawei's TriPhone phone gets 2.7 million pre-orders ahead. Yeah, I was about to comment on that. Yeah, so Huawei is already, for those who don't know, Huawei is already doing TriPhone. But I was actually speaking to a phone distributor just now. So the challenge is when you do TriPhone, even the cover is a challenge. How do you get a cover for that? And it's going to be very pricey. So it's very surprising they already got 2.7 million pre-orders. So you can imagine a twin phone is already like $2,000 over. A TriPhone could be like 4,000 or 5,000. But again, like you said, like this anonymous attendee said, there's the huge demand. But I'll leave it to Helena. You'll be pricing bonds on Friday. Any views? Sorry, I don't have any views on it. Yeah. Apologies for that. I don't really cover the bond market on that. Yeah. Please, what can I do with my EC REIT? Okay, I'm not sure on what is the latest development on EC REIT. we shall try and check it out for you because we don't really follow what is going on with EC REIT. Yeah. Maybe I can hand it to Darren too, and for John for some of the semicon questions.
Yeah. Thanks for me. I'll take this Semicon one. There's only one here. Why is analyst bearish on ASML? Not sure who is bearish on ASML, but if anyone is bearish, the likelihood is because of more export controls to China. Because China is basically half of ASML's revenue. So ASML actually sells a lot of its DUV machines to China. Latest news is that because they are based in the Netherlands, the Dutch government actually decided to withhold some of the export licenses to China as well. So that could be a little bit of a roadblock in terms of exporting to China and generating more revenue. So that'd be the only thing I can think of right now. It's its exposure to China. Yeah, hope that helps. Yeah, I think that's all for me. I'll hand it back to the rest of my colleagues.
Yeah, thanks, John. Yeah, please advise so I can do it easier. Yeah, like Paul mentioned, I also do not really follow, but yeah, unfortunately can't do much as well because the share is been suspended for about a year. So yeah, sorry, can't really give much comments on that. Yeah, and one more for me is digital core REIT comments. Yeah, so for digital core REIT, their main issue right now is that they have two LA properties which currently expires in October. So the main focus is to release those two, but the outlook for them is still positive. AI is still expected to contribute to continued growth in the digital spending. And in their strongest market, Northern Virginia, the vacancy rate is only 0.6%. So demand continues to outstrip supply, so it's still very strong there. The supply is basically limited by utility providers being unable to meet the rising demand for power. So no supply until 2026. So digital core REIT should be able to command higher rents going forward when the leases expire. But the main one for them is the LA asset that the lease expires in October. Yeah, I think that's all. Maybe we can hand it to Zane for TA. Yeah.
Sorry,
Or
before
John.
we
Yeah.
before we go there, there's a few more questions I'll just take.
Thanks.
Comments on Disney. Are you bullish for Disney? Short answer is no. Disney, I mean, they've got two main businesses. The first one is obviously the theme parks and all that. The second one is their streaming business. In terms of their why we're not bullish is because their streaming business is still kind of, I guess, not succeeding. Is a nice way of putting it. Yeah. So, and then obviously the key competitor there is Netflix. So Netflix is still able to price to monetize users a lot better compared to Disney. Disney, I believe, is still actually losing money on it. And so, even though they have done quite a lot of cost cutting, I think that the direction for Disney as a company is still very unclear. They've got their legacy business on one hand, and then they're trying to excel in streaming on the other hand. I think that currently they haven't really been able to find the right balance for this. That's why we're not really that bullish on this. Like, if you wanted exposure to entertainment, just buy Netflix as a pure play streaming, pure play entertainment. Because I think in terms of product, the platform, everything is a little bit better compared to Disney. Yeah. So last question here before we do over to Zane. Jonathan, what is the reason that Apple and Meta were left out in relation to your Power 5? Yeah, so Apple, main reason why we left it out is because basically there's no growth, or rather very minimal growth. I mean, when you look at Apple, you think about iPhones, and iPhones year on year, the volume isn't really growing, the ASPs aren't really increasing as well. So the only real driver for them is actually for both revenue as well as earnings is actually their services business. But there'll come which is growing. I think it's almost like 30% a year. But there'll come a point where services will slow down quite significantly, and then if that slows down, and unit volume doesn't increase, then you really have no growth. Be a 5% company. So that's kind of why Apple was left out. Meta, because in terms of digital advertising, it's either between Meta and we picked Google because Google is the monopoly in search advertising, and it's in terms of revenue dollars, advertising dollars. Google still has, I think, maybe 60%. So it's the majority share in the market, and so that's why we picked Google. Another reason is from a valuation perspective is a little bit more compelling, and at the same time, it's got more levers to grow. So they have their own cloud business, whereas you look at Meta, they actually have an anchor dragging them, which is their metaverse. So that's why Meta is also not included. Yeah, so hope that helps to answer your question. Maybe with that, I'll hand it over to Zane to do some TA. Thank you.
Yeah, let me just clear this up, then I do have to go off soon. Okay, I'm holding JP Morgan. Do you advise continue holding in view of the net interest margin narrowing? Okay, this Glenn is not in, but from a macro point of view, it's probably not a good idea for banks in general, I guess, because you're having two big headwinds. Like you mentioned, the interest rates is coming down, and you could also see the economy slowing, and you could enter into a provisioning cycle. That means they have to make provisions for bad debts. So from a very top down, without having Glenn's view, it is of course a bit more challenging is you enter into this cycle. So you're entering to a slow growth rate cutting cycle, and that is generally a challenge for banks in general. Okay, the next one, let me just quickly clear. Do you see? Okay. Do you reckon the US dollar has bottomed at around 130? We think maybe a little bit left, because I think, okay, so for currency, there's usually just two anchors. So there's either interest rate differential or economic growth differential. So right now, both is shrinking for the US because interest rates is shrinking. The difference with the rest of the world is shrinking, and the economic growth. So we think maybe one more cut, two more cuts, then I think the market will probably price in all these differentials. So our own guess is there's probably one more leg down for the US dollar, because the differentials are going to narrow down even further. What's your outlook for Propnex? Do you think they can cut dividends? I think they will cut this year, but very mildly. I think although it's not a written policy, but my understanding is that they always like to look at the yield rather than just an absolute, because they have 50 million of cash, and most of the dividends they pay is from the operating cash flow. So they usually want to have like a 6 to 7% dividend yield. So even if they cut, they try to maintain the yield intact together with the share price. That's my own thoughts. And also, any sharing regarding Singtel target price being above, Phillip? If someone could share direct me the information. Yeah, you can. I think my target price is $3.44. The reports are all in our Poland's website, or you can go Stocks BNB. I think that's where Stocks BNB, like instead of Airbnb, you just put Stocks BNB. That's where you can get the reports. Paul, grateful if you could put up the slide on technicals in Singapore and US and what's coming up this week. Yeah. Okay. Yeah. I think, yeah. Sure. Can someone put that slide up? Okay. Thanks for the question. Yeah. Zane, I think I hand it over to you. Thanks.
Okay, thanks, Paul. I'll begin with the TA. Yep. So first question is on Singtel. So I think Singtel for now is probably consolidating in the range. We see resistance at 320. Then support is probably around 310, 311, which is this recent breakout level over here. So probably some sideways consolidation between 310 to 320 now, I feel. Then the next question is for Palantir. Palantir, I think currently it's some sideways consolidation after a pullback from resistance $33. Yeah, previous is doing a retest of this previous resistance breakout around 29.30. Yeah, so still finding support and resistance coming from this recent breakout level around 31.40, 31.50. So I think it'll probably just do some continued sideways consolidation for some time first. And then for so far, I think still finding resistance at $8 level, and then we're seeing some pullback for now. I think we might see some for a little bit more pullback, maybe to test this breakout level around 670, 680. Then I think we'll get some support back in. Yeah, then currently I think resistance is probably around 730 to about 750 area. So maybe a little bit more downside, maybe perhaps test this previous breakout level. Then we see a bit of a bounce for SoFi. Okay, then next up is SPY, QQQ, and FEZ. So for SPY, I think last week we saw a breakdown of this range consolidation. For now, it looks like a double top around 564. Breakdown 555. I think for now we are actually testing the first support level next at around 540. So if this can't hold, then I think we might see some further downside towards around 530, 531, which was this level where it broke out from to actually trade higher. Yeah, so yeah, we might see some further downside towards the next support level. Okay, next one is QQQ. It's quite similar as well. Last week we had a breakdown of the 472 support level. Then also on Friday we also broke below this next support level at around 458, 459. So I think for now we probably see a little bit more downside to test the next support level around 442, 446. This area where price broke out from recent back in the start of August, and this was also a previous swing low level as well. Okay, then for FEZ, I think FEZ it looks like a continued range consolidation. We're still seeing strong resistance around $52.50. Price last week we had a breakdown below support around 51.40, 51.50. So I think for now we would likely to see a little bit more downside, maybe to test the next strong support around 49, which previously held price over here and here as well. And so maybe perhaps a few more downside with this selling momentum, high volume currently. And there's a questions on Semiconductor Industries. For Semiconductor Industries, I think for now maybe some range consolidation, but I think as long as price is still holding above 480, then I think there's still chance for a bullish reversal upwards, since this is an inverse head and shoulders formation over here where price will perform with high volume. So I think for now probably some consolidation between 480 to $5 currently, where the volume has dropped off after this spike. Okay, then for Franken, I think still some price weakness recently. Continue to trade downwards, and then there was a breakdown below this 125 support level. So I think we could see a test of these recent lows again around 112 to 114 area. Then afterwards you might see a small bounce, but price action still remains quite weak for now. Yeah. Then next one is on Silver Lake. Okay, for Silver Lake, I think nothing too much. Yeah, for now it's just sideways. After the news, it's still probably just continue to just trade this very small range. Volume has also been decreasing quite a bit as well. Yeah, so I think much Baostate. For Baostate, I think still kept in this range consolidation. Last is still seeing resistance at around $1.01 level. So there's some pullback for now. Support is probably around 97 cents to 98 cents area for the time being. So I think we are still kept this range consolidation for the time being. Okay, then for CLI, CapitaLand Investment, I think for now, probably some range consolidation at this between like 275 to around 285. So price went up to test the resistance at around 22, but there's still some resistance over here. So probably it needs to do a bit of sideways. As long as if you can hold above the higher resistance like 271 to 275, then I think it will be quite positive for price to actually move high. For now, probably some sideways consolidation after a run up over here. Okay, then next is DBS. I think DBS we could see the price will go higher because after this range consolidation breakout at around 36.20, price is still holding above this breakout level, and then yeah, so that we are still seeing a trend of higher highs and higher lows for now. So probably if you can clear this last week swing high around 37.25, we could see another retest of the previous high here, close to about 37.95. Yeah. So that's for DBS. Then for STEC, I think for now probably still sideways, but I think price is consolidating at a higher level. So previously, there was resistance around 95.5 cents, 96 cents. After price broke out, this has turned into support, but still facing some resistance from this previous level around 98.5 cents. Yeah, so probably I will expect some sideways consolidation again. Probably at a higher with continuing trend of higher lows for STEC. Okay, then there's a question on Yangzijiang shipbuilding. Yangzijiang shipbuilding, I think for now, I think price is probably doing some sideways consolidation. So resistance was last week there was a double top around 264 level, and currently the support is around 250 to 252 area. So currently price is down back at the support, which was this level where price broke out from a tight consolidation. So maybe some support over here, but I think that there's probably resistance around 256, 257 for the time being. So maybe some very tight sideways consolidation. Yeah. Okay, for NVIDIA, yeah, I saw there's a question also that's whether we could see further downside correction on NVIDIA. And so NVIDIA, I think price action is quite weak for now. Since last week where price broke below this range consolidation at 123, we've seen bearish price action where price continue to break below this 170 as well over here, and then some sideways over here last week, towards the end of the week. But price is still below this breakout level at 108. So as long as still finding resistance, I think probably still the bias is still towards the downside. I think we could see further pullback ahead for NVIDIA to test this next support level around 96 to 99 area. Yeah, so 96 was a previous $96 was a previous strong horizontal resistance that acted as a support. So probably we could see a retest over here, then maybe some slight bounce afterwards. Yeah, since given that price is still below 108. Okay, then there's a question on TSM. Okay, for TSM, yeah, there was also a break below this 166 level, and yeah, still price is still holding underneath it. So I think we could see some downside as well to test this next support level around 153, 153 followed by 148 next. EMD, I think for now, yeah, it's also continue to trend downwards over here. So probably we are likely to see this downtrend continue. For the time being, to next support level probably be around 128 over here, that where do a retest of where previously price sideways over here first before it went up. And then next one is Baidu. Okay, for Baidu, I think for now, it's still in this range consolidation over here between like 79.50 to about $85. But then you can see that price action recently has been weak. Continuous test of the support level, but forming lower highs along the way. So I think we could see a break. Currently, it looks like a breakdown below this 79.50 level. So I think we could see further downside hit for Baidu. Next support level probably around 73.70 or about 75.50, 75.60 level, which was the lowest back in November 2022. And then for BYD, I think BYD might do some sideways consolidation for now because this was the key level at 228 over here, price breakdown. But then, however, it managed to recover upwards, above it over here last week. But then still likely face some resistance from this previous breakdown level at 240. So I would expect some sideways consolidation here first, between 230 to 240. And then for Tesla, I would think probably for now could be some range trading. Price retested the resistance area 228 to 234 over here at towards end of last week, but still finding resistance. So I think for now it could go back towards this recent support area, probably around 204 to 210. Then it might just do some sideways consolidation first. Then for IJM Corporation, yeah, I think for now, price is still on the downwards trend. Currently is doing a bit of a consolidation, and still holding the key support around 290 about there. So if as long as this recent lows at around 280 can hold, I think we might see some sideways consolidation with resistance still around $3. And so probably forming a bit of a range over here. Then if this breaks below 280, we'll probably see test lower levels like 270 next. NTA for three local banks. Okay, I talked about TBS earlier. I'll talk about the other two next. First up, UOB. UOB is looking like it's doing a bit of a range for now. So still forming higher lows and higher highs. Since breaking above like $31. Currently support is around 31.30. Resistance is around $32, which was this previous breakdown level. So probably some sideways consolidation here. First, if you can break above 32, we could see a retest of the previous high around 32.35. Then for OCBC, also last week, after the breakout of 1440, there was a retest over here, it held as support. So with that, probably we could see a retest of the highs again around 1490. Yeah. In general, all the three local banks, I think probably could see some slight upside, given that with the recent breakout of the range consolidation resistance, they all managed to trade like at higher lows and holding the breakout as support. Yeah, then moving on to the US banks, I'll talk about JP Morgan first. So JP Morgan last week, I think we're seeing some weakness. There was a break below this $217 level breakout over here. So I think with that, we could see some slight weakness further ahead to test the next support level around 207, 208 over here, which was a previous breakout level as well as this support. Yeah, so maybe some slight weakness ahead. For Citigroup, also looking similar, finding resistance at this prior support level around 6. This was around 62, around 62.80. And last Friday we saw a breakdown below this support at around $60. So I think we could see some slight downside for the near term to test this previous consolidation resistance around $58. Yeah, for Citigroup. And then for Wells Fargo, also we're seeing price weakness towards the end of the last week. Facing resistance from this previous resistance level 58.50, and then we can see that it actually just nullified this trend of higher highs and higher lows with the breakdown of a few support levels at 57.30 as well as here around $56. So I think probably some a bit more downside maybe to retest this previous this range consolidation area between 51.50 to about $53. Yeah, previously range it did a consolidation over here before price went up, so we could see a retest of this previous resistance that could act as a short-term support. Okay, then next one is on Apple, Tesla, Bank of America. Okay, for Apple, I think some weakness for the time being as well. There was a I tried to break above this 228 range consolidation resistance, but however, it just it was closed underneath it after just 2 days, and then also broke below this 224 level as well. So some slight weakness. For now, this 224 has also become resistance. So we'll expect price to actually just consolidate in the lower area with support next at around 213 to 214 area. So probably a lower consolidation range given this trend reversal over here. Okay, then for Bank of America, also some weakness for now. Price is still facing resistance from this trend line. Then also last week we are seeing price. There was a breakdown on Friday below this $40 breakout level over here. So for now, I think maybe some slight downside to test this next support level around $38, which was this previous consolidation area, and then the swing low support over here. Okay, then TA for some healthcare companies, Pfizer, Moderna, CVS, and I think United Health. First up for Pfizer, I think for now, nothing too much. Still just keep on consolidating for now between about $28, which was this previous range consolidation breakout. And then resistance currently is around 29.20. So I think for now, probably expect nothing too much. Probably still in this consolidation phase. For Moderna, I think we're still seeing price weakness. Since the breakdown of this support level around $78, price has been trading lower. Currently, it's holding at a support level around close to $73. Yeah, so $73 previously was this range support level. So yeah, we might see some sideways price action over here first, but I think overall it's still rather weak with resistance probably still at this 77 to 79 breakdown. Yeah, then below, if it price break below this recent lows again of 71.50, we might see it go further downwards to test the next support around 67.60. So that's for Moderna. Of course, next one is CVS Health. Okay, CVS Health, I think for now, quite similar to Pfizer, is just rather sideways, seeing resistance for now still around close to $60, and then there's also resistance at 61.20. So then support is around 55.80 for now. Yeah, so I will still expect some range consolidation in the near term. United Health, I think, is still one of the stronger ones. Yeah, since breaking above the resistance 590, currently is still holding a support. So I think that's still okay. We're still seeing this rising price rising over here, this trend. Yeah, so as long as price is still holding above 590, I think it's still probably could still go higher, but this counter, I think, it tends to do a bit of range consolidation along the way first. So for now, we might see maybe price do a range between 590 to 607, these recent highs. Okay, then there's a TA question for Propnex. Okay, for Propnex, I think price it looks like it's probably consolidating the range for now. So we are seeing resistance at 79 cents. Support probably is around 75 cents area. So my guess is it will probably be still kept in this range consolidation. Okay, then there's a question TA for ANZ Bank and FLT. Okay, for ANZ Group, the ANZ Group, I think we're still seeing a strong trend over here. Price is mostly okay. Previously, it was a range consolidation and then broke out upwards. It did another range consolidation over here, and recently there was a break above this resistance at $30.20. Holding a retest. So I think with that, it's still positive. I think it's still likely to see new highs ahead, given this bullish trend continuation. Then for Flight Center, okay, Flight Center I think is probably still in a quite a big range, probably in a big range consolidation because price is still rejecting above $22 over here, this resistance. But then there's also quite bearish price action over here where we can see that it's also it tried to break above $21 over here, but then subsequently closed lower. So I think we probably see this trend of lower highs and lower lows probably continue on. For now, current support is probably at around $20 next, and then followed by around $19. So we might see some price pullback further given this it can't break above it can't hold above $21 for the time being. And there's also a question on CICT. So CICT, I think for now, I think it looks a bit range bound. So support is probably around 205 to 208 this area, which was this prior range consolidation resistance. But then we're seeing resistance around 214 to 218 for the time being. So I think it's still probably gonna be quite range bound for the time being. And for Geo Energy Resources, I think for now we might see some further downside because price was actually holding in the range over here. 27 cents as the support level, and then there was another tech range over here. It broke below 26 cents, and then price just did a very trend continuation downwards. So I think for now we're likely to see price trade lower, maybe slowly to retest this previous resistance breakout close to 22 cents, 22.5 cents even. Then for SGX, okay, I think the trend is still strong since the breakout of the consolidation at 980. We're still seeing price trending upwards and then still holding support at prior resistance. For example, over here is around 1050, 1060. His previous resistance turned to support. And then price is continuing to form higher highs. So I think with that, we're still likely to see some higher highs for SGX. Okay, then for iFast, I think maybe some range consolidation for the time being. So since price rejected of this ascending triangle breakdown at 730, we went to do a retest of this support at 680. It's still holding. I think over here we might see some slight consolidation for the time being with resistance at around $7 for the time being. Yeah. So then above $7, next resistance for is around I think 7.15 about there. Yeah, so maybe some consolidation between 6.80 to $7 for the time being. And question on Ping An Insurance. Okay, so for Ping An Insurance, I think some slight weakness on Friday. So originally, we were seeing price holding like higher lows, slowly try to trend upwards. But then you can see on Friday, price booked below this $35 support level. So I think with that, short term wise, we could see some slight weakness to retest this breakout region over here between 33.20 to about 34 over dollars over here. Then afterwards, this $35 will likely turn into a short term resistance. And then for JD, JD I think probably still quite range bound and still seeing a clear range between around $99. Then resistance is above 106, 107. So it looks like last week was consolidating at 104, but then today it looks like there's a break below that. So we could see some slight downside to retest these supports close to 98 to 99 area. And for next one is CIFMAC. So for CIFMAC, I think it could be heading slightly higher. So because it was in this consolidation over here between 88 cents to 92 cents. Over here price broke out and did a retest and is still holding above it. And also there was also increases in volume when price broke outwards. So some slight upward bias for now, but I think still probably still some resistance at around 96.5 cents, 97 cents area. So maybe it could be consolidating in a higher range as compared to earlier on for CIFMAC. Then next one is Olam. For Olam, I think for now, nothing too much. The main resistance is still at around 118. But for now, time being, we're seeing another range form between 110 to 115. So I think for now, that will still continue. Above 115, we'll see 118 as resistance. And then below 110, 104, 105 will be the support. Yeah, so I think still very range bound for Olam. Okay, so then next up for Wilma, I think for now it looks like still a bit of a consolidation taking place. So over here, price tried to break above 313 resistance. Then it's just consolidating around here. The positive is that the higher low is formed over here at the previous resistance at 309, 310. So when you look at this stretch, it's still forming. It's still in the phase of try to trend upwards. So I think as long as this 309, 310 level is still holding as support, we could see price do a bit of range bound for time being with resistance at 320. Yeah, then if you can break 320 afterwards, then it would continue to move upwards. And then for first resources, I think for now, probably still quite range bound because still facing some resistance around 150 previous horizontal resistance, but also we have this breakout of 145 recently, so maybe some range bound between 145 to 150 for the time being. And then there's a question on what's the outlook at TA on Empire. Okay, for the TA portion, I think price action still remains quite weak. We are still seeing, I think is this descending triangle pattern over here, where the key support over here is still around 96 cents, but price is forming lower highs over here with also resistance at this $1 in that area. So I think probably some consolidation near the lows of 95 and 96 cents for the time being. Okay, then next up is Volkswagen, Mercedes-Benz, and BMW. Okay, sorry, actually I don't really keep track of this one. Maybe you can specify which markets they actually listed. I think I'll move on to other questions first. For AT&T, I think the trend is still quite strong. We're still seeing this bullish trend probably continue. Last week we had a breakout of the resistance at around $20. So I think with that we're likely to see some higher highs ahead. And for Verizon, I think probably still quite range bound. We're still seeing price every time where it goes above $42 as it keeps on facing resistance. So I think for now, probably some a little bit of a downside. I think if you can hold $41, you might see a tight range form. But if you can't, then we might see go back to a lower support like $40. Yeah. Overall, the big picture is quite range bound with the main support at near $38 and the key resistance at $42. And then for Capital DC, I think is still trading in this mainly in this uptrend channel over here. Recent price action is still positive. Retest of breakout at 208 still holding as support and trading above this previous high of 215. So I think we could see the price go higher in the near term. Short-term resistance could be around 223 about there if it follows the channel resistance. RMT on RMC. Okay, RMC, I'm not sure which market is it listed. Maybe you can state in the chat below. Then I'll talk about PenU. For PenU, I think for now it looks quite range bound currently. It's still facing resistance at 53 cents over here, which was this breakdown of this level over here. I think support. Then support I think will be quite strong around 49 cents area over here. So I think we just consolidate for a while here first. Yeah, I think I'll hand over time back to my other colleagues if there are any more questions answered. Thanks.
Yeah, sorry, Ambrish, you could flash the slides. Yeah, thanks. Okay, we don't really have any more questions. So maybe it's almost 1 o'clock. We'll just end off the webinar here. Just like to thank everyone for joining us again. See you in either one of our corporate insights webinars, or we'll see you again next week for 11 o'clock. Wishing everybody a good week ahead, and see you guys. Thank you. Bye bye.